we can start. People just our
So, are we done with APV?
why?
I'm asking because I wasn't around the last class.
Oh,
But but I watched the YouTube actually. I was
did
trying
you
to
know
lay my hand on that. They made 2029 question, but you know, green lay
2029?
hand. Sorry,
Yeah, sir.
2016. Sorry, na slip of tongue, sir. You know when you are just coming in and you are trying to fit in, trying to change, trying to enjoy the class as well. That's what you have.
I can relate.
Mhm.
Yeah. I'm coming. Let me record so that I can since I had, so that I can so that I can do this thing. You guys can hear these announcements and all of the stuff I want to say.
Jesus Christ.
Okay. So okay. The recording is still trying to record. Sorry, I'm waiting for this recording thing to finish. So, madam, that watch the you watched the YouTube. How was it? Did you not understand it?
I understand it a bit, but trying to lay my hands on that May 2016 question, one question. I think I know be smart, you know.
That question is simple now.
Even when I try to do the discount factor, uh, it threw me off balance. So.
I've not actually what have I done? I've not actually really looked at the question, sure, anyways. Okay, I think we are good now. So I think we can start. Okay, people have joined the class a little. It's difficult. Yeah, I'll look at it. So our recording has started. So good evening everyone. You're welcome to class. Welcome to class. So how is you guys cost of capital? Have you finished cost of capital? Did Mr. Tobe finish cost of capital with you? Hmm? People are not answering me. Did you finish cost of capital?
Yes, sir.
So people have done project specific cost of capital.
Yes, sir.
Yes.
So you know how to on gear, you know how to gear, you know how to anything gear. You people can gear anything now.
Get the thing. If you agree to gear.
So people understand the debt to
Oh, well.
equity ratio when they say debt to equity ratio is 40%. Let me ask the classic question. If they say debt to equity ratio is 40%, what is the debt there?
The debt is 40, equity is 100.
40, why equity is 60?
If they say debt to
Debt
equity
for
ratio,
the equity is 100.
if they
Yes.
say debt to equity
100.
ratio is 40,
Yes, it's 40.
I'm not hearing you people.
It
I'm
is
just hearing
40.
different answers.
Debt
Debt
is
is
40,
40.
equity is 100.
Equity is
Repeat the question.
40. Equity is 100.
No, I think
Hmm.
I get is 40, equity is 60. Also, please explain it clearly to us.
You feel like what?
Debt
Sorry.
is
Debt is
40, equity is
40,
60.
equity is
Yes.
60.
Debt is 40, equity is 60.
Debt is 40, equity is 100.
Hey, you're welcome.
Okay, sir, please, like the understanding I have on it is that debt to equity ratio 40%. It means debt over equity. So I just convert 40% to fraction. I will
No,
have
I lie.
debt of my equity is 40 over
I
100, which
lie.
is same as 40%.
It's 40. Oh. Debt is 40, equity is 100.
no, like see the point then 40
Equity
over
is
100
60,
means
debt
debt
is
is
40.
40%. My equity is 1 minus 0.40, which is
No,
60%.
no.
No lie.
Our debt to
If it is debt
Uh,
to equity
It's okay.
gearing
Oh.
now, it's 100.
Debt 40,
It's okay. It's
equity
okay. It's
100.
okay. Oh, it's okay.
Equity is always 100.
Always, always care. Níbo nìyẹn wà?
Always.
You said one. You said 140, and I said 40 is debt, while equity is 100.
It's okay. It's okay. It's okay. It's okay. Please, there's somebody that is unmuted and is disturbing me. Who's that person now? Chimaubi, please help me with your mic.
person is scraping for.
Yeah. Okay.
Scraping for jollof rice.
Okay. So now, let me explain something. Okay, let me help you. It's not in my, I don't know, it's in my place to help you, Sha. So let me just explain. Let me just explain. Hope everyone can see my screen. And Mr. Chomobi, leave that pot and listen to me. Leave that pot. Anyways, what was that our stuff that we're using? Working notes on capital allowance, Abi. First, problem has happened in this class. Again. I had to oh Jesus. I did something to my system. So all those files, I don't think they are here. Not some but the Word document. Oh Jim. This one is trouble. Okay, so please, somebody should send me our capital. Let me send our capital investment decision. The what's the name? The PDF format. But for today, I will use a new. How do I draw my copying thing like this? I think you guys should just give me 1 minute. Let me look for my flash drive so that I can copy all those things out. Just give me 1 minute, please. 1 minute. If I knew, I should have done all these things. And so. If you know you attempted our assignment, please can you signify?
So which one? Is it the illustration too?
Yes, please.
I did.
Everything is 2024. Oh, 11. That's 11th of March. Thank you, sent on. Please, just give me 1 minute, please. Please, just hold on. Trying to look for our folder. I changed my flash drive, I mean my hard drive, so all of those things. Laptop. I don't think that's a laptop. Oh Jesus Lord. Please, can somebody send me that our material? That what's the name material? That capital investment. Please, I'll use a new word today, please. Somebody should send me that capital investment decision note, please, so that I can oh yeah, please. Has anybody sent it? Okay, you sent it tonight. Don't forget to get to that line. Okay, so now I've seen it. Thank you very much. No, I cannot use this particular working note now. I know it's PDF, so I cannot use it.
How do I send it, sir?
No, don't worry. Somebody has sent it. So let me explain that debt to equity ratio issue real quick. Now, the example I gave was, they say debt. Sorry, let me change this format. Please help me with your mic, please. So you say debt to. Please help me with your microphone now, please. Okay, so I was saying that today I'm telling you debt to equity. Equity is equal to 40%. I mean. Now, what I'm telling you is, we can either have debt to equity. We can either have debt to equity, or we can have debt to total assets. Now, what your debt to equity means is, how am I like this today? So if they say your debt to equity, so you can come here and say debt. This is what your debt to equity means: debt over equity, Abi. While your debt to total assets, it means something like this. It means debt over debt plus equity. I mean, this is what your debt to equity means. This is what your debt to total assets means. Total assets means your debt and your equity. Now, what I want you to know first, what I want you to hold with your left hand is, you see this, this denominator, this one that is down, this denominator that is down. At all points,
yes,
listen, at all points, this thing must be 100. Are you listening to me? At all points,
Okay.
this your denominator must be 100. Please, Mike, everything here must be 100. Now, if you now say debt to equity is 40%, what this means is your debt here is 40. And based on my analogy that everything in this denominator must be 100, your equity is what?
60.
Now, everything here must be 100, say. So it means that your equity is 100. Everything here must be 100 at all points. Is debt over equity. So your equity is 100. Let me now come to the second scenario. Debt to equity is 40%. So if your debt here is 40%, debt here is still going to be 40%. Since debt is 40%, anywhere you see debt, it means 40%. So what does this require for this O to be 100%?
60.
So it means your equity in this particular scenario is 60%. Just watch out for that. I don't know that denominator. Just watch out for it. At all points, it must be 100. So debt to equity, if they say debt is 40, it means that your equity is 100. But if it's debt to total assets or debt to debt plus equity, they can say it either ways. It means this is your equity is 6. That's just the basic scenario, basic story behind it. Anyways, that's not why I'm here. Now, real quick. So we started with adjusted present value. And we've solved questions on it. Now, honestly, deep down in your mind, I'm sure, okay, but before I go to your mind, I know there are some questions here and there which I would answer, but I noticed there were a lot of there were mistakes. There were some mistakes that for people that did the assignment, so there were a lot of here and there. So I decided that maybe, but it would depend. Do you guys want me to solve that question to yes or no? Or no or no? Sorry, not yes or no. No or no?
No.
No, Abi?
Yes, but we would love you to do May 2016 question 1.
I should do May 2016. I should leave that one.
Do
I'll
May
do that one.
2016.
Please, you can do the two.
I can never
that
do
one.
it.
You can never do the 2.
Please do the assignment, sir.
I will
Assignment, please.
Do the assignments. Forget about 2015, please.
Somebody said I should do the two. People tell me to do all the questions I find out. Anyways, so but please, I will do that assignment. Honestly, I did not plan today. I wanted this class to just last for 1 hour. I just want to come out and do introduction to international capital budgeting. Then maybe Wednesday or next week, I'll come and solve question. I think we have about 1 or 2 questions in our question bank. Then from there, I will close capital budgeting chapter. That's my plan, honestly. I did not plan to come and solve that question at all. But anyways, because I'm a nice person, which I am, I'm already thinking about, I will solve that question only on one condition. Only on one condition. The condition that it must not take more than 5 seconds for you guys to call figure for me. If we are on the same page, if you guys think it's okay for you, it must not take more than. It's not that I will pursue you people up and down for figure. If you should take more than 5 seconds, I don't stop with that. So if that works, then I will solve it. So maybe I'll solve that in the next 30-40 minutes anyways. Now, before I go to the question, now let me, like I said, I noticed that there were some questions here and there. So now let me break down these questions to you. Before I break down the solutions to the questions that are on your mind, let me apologize to you guys. First of all, I'm very sorry for 2 things. The first thing I'm sorry for is there were a lot of here and there DBDABA in our last class. Although I already apologized in the last class anyways. I'm still going to apologize again. Very, very sorry. Very, very sorry. The class was so long and it was a long day. It's not an excuse anyways. I'm very sorry if I sounded rude or if I offended anybody based on my own chances or anything. I'm very, very sorry. That's the first apology. My second apology is I noticed something. At the end of the class, I said that you guys should discount the issue cost using year 1, Abi. Now, I think it was during that some people were sending the questions to me and were like, they don't understand. I'm like, what is not so clear here? Then I went back to this material on the group chat. I just opened it. Then I read the question to myself again. And I'm like, oh, Jesus is Lord, what have I done? What happened was last diet question. Okay, or last diet classes. There was one particular question we saw. I think it was during revision. I don't know where that person brought that question from. I think it was one ACCA question that we solved. The issue cost was supposed to be discounted at year one. I will explain why to you. The issue cost was supposed to be discounted at year one. So when I saw that, I really loved the question because the question challenged me so much. Because person just brought it in class, revision now. Person just sent it to me in class. Then we just attacked it. The question challenged me in class. So I was like, okay, I will put it inside the question bank. So honestly, I thought I already kept it there. So I thought it was the one that was there that I told you guys to go and do. But looking at the question, I saw, no, this is not the question now. So what it means is for that particular question number 2 that we have, I'm so sorry. You are supposed to discount year 1. Sorry, with year 0. I read it again. You're supposed to discount with year 0. Now let me not explain so that you because I know that it's because you guys don't understand the basics. Maybe that's why you believe what I said. Now let me not explain why we discount issue cost for year 0, why we discount issue cost for year 1. Like I explained to you, what is issue cost? I told you that issue cost is just the money that, or the cost incurred when you are trying to accumulate or gather maybe the initial outlay. Now, what I'm saying is, I want to start a business. I want to start a real estate business. Then I went to my friends. I gathered maybe 40 million naira. My working capital, I removed 2 million naira from my pocket as my working capital. So the total money I gathered, total money required. The total money required that I actually got was 42 million naira. So, but like on the 40 million, I had to settle some people. I had to settle the manager, maybe a bank manager. I had to settle some. All those are issue costs. That money spent to accumulate that particular money. Now, why are we discounting that? Is it that years because all those settlements were made when I was at managers. As at now, I paid
Sorry,
them
sir, we
to
can't
get
hear your explanation, and I think
just issue because their money
we can't hear you.
I spent to gather
I think it's his
the
network.
money I need
We can't hear you.
now.
We cannot hear you, sir.
So you're
So that's
breaking now.
why we discount it at years.
We can't hear you properly.
But that particular
Hey,
question,
Sir, your line is bad.
you now
Hear
add,
you.
I don't think he can hear also.
I'm not sure you can hear us because we can't hear him at all. He's not
We
hearing.
can't hear you, so please, so
do I do? Please, is it better now? Can you guys hear me now?
Yeah, it's better.
Better, sir.
Yes.
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 Yeah, we can hear you.
I think his network has locked him out again.
It's now complete silence now. Cannot hear anything.
Please, can you guys hear me?
Yes, sir. I hear you now.
Oh, wow. Please, what part? Like, when did you stop hearing me? Oh, yeah.
Why we
We're
From
trying
the
discount
to
beginning,
using
sir.
your 0 and your 1?
I cannot. I said, when did you stop hearing me, please?
When you were trying to explain the difference, when we will charge issue costs at year 0 and year 1.
Okay. So what I was saying is, I think I was talking about the meaning of issue cost in general. Now, I said issue cost is the money that is spent when you are trying to gather money, like the money you spent now. So what I said was, imagine I want to go into a real estate business and I need about 40 million and I only have 2 million naira. So I go out, maybe I go to banks or I go to my friends that I beg now, I need 40 million. How much can you give me? He said he can give me 20 million. Like I may get 20 million from somewhere. But I might need to settle the bank manager or I might need to settle somebody. It's just money spent. It can even be like during that process, it can even tell me that okay, if I want to get a loan, or this person can say if he wants to, he needs to see my audited account. I'll go and pay auditor to come and check my account. All those things are issue cost. They are called issue cost. But the problem is why we discount issue cost with year 0 is because all those money are incurred today now. They are spent today. They are spent to accumulate or to gather the initial outlay. The manager that I'm trying to settle, I'm settling the person now. And I've told anything currently is at year 0. That's why we discuss. So I now said that in situations where you can discount it with year 1 or year 2 is, imagine they now say that the issue cost will be spread maybe over 2 years. That is, maybe you're not paying the manager once, maybe you're paying the manager twice. So it's not telling you that the issue cost now will be spread for like 2 years. In that situation, you can now discount with 2 years or with the annuity of 2 years. That's what I'm saying. Since it will be spread, so it means that it's being spread now means that it will not enter when the project has started. Gongo. So with something like that, you cannot discount with. I think that particular question, he had that clause that this issue cost blah 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 will be spread. Okay, I think they said the issue cost was not paid immediately, but paid at year 1. That was paid at year 1. So it was in that situation that okay, we now knew that since it was paid at year 1, we discount with year 1. But all the issue cost, if there's no clause like that, please always discount your issue cost with year 0. I hope that's fine. Please, is that clear?
Very
Yeah,
clear,
please,
sir.
is that clear? Thank you very
Very
much.
clear, sir.
Now,
Yes, sir. Very clear.
another thing I want to talk about is
Yeah, it's very.
thank you very much. Another thing I would like to talk about is there's also some here and there about business risk and financial risk. Ms. Ngozi, you can listen to me here. There have been some here and there with business risk and financial risk. Now let me explain again. I told you that Business risk is just a risk of your normal operations. Now let me go deeper a little. You see, business risk is just is like a risk of operating the business without any debt. Listen up. I said it is the risk of operating the business without any debt. There's no debt, just purely equity. It's purely equity. It relates to uncertainties in revenue, but it relates to when there are uncertainties in costs. That is, how much am I going to make? How much am I going to spend? Do you understand? So what I'm saying, okay, let's imagine a real estate business. You want to build a luxury apartment. You want to be building an apartment for in Lekki, Banana Island. If you don't borrow money, like you only use shareholders' money, you do not borrow money from anybody, just you collected money, just sold shares. Your problem or your risk or your problem will not be about paying interest now. So your problem will be about, with this apartment sell, do I need to contact Ola of Lagos? With the market crash, all this money for construction, with cement go up, that's your problem. That is what business risk is saying. It does not have anything to do with debt. Say, okay, maybe nothing with debt. Now, for financial risk now comes with you using debt. Your capital structure is now changing based on the debt factor because there's now debt there. So now, still my real estate business. Your problem now will not be coupled with the problem of with this thing sell you will not be having problem of can we even pay interest if our sales drop? Will bank increase interest rates? What if we default this now? We're going to go to prison. Do you understand? So that is what financial risk is now saying. So if you understand the meaning of the two, don't worry, nobody will ask you define business risk, define financial risk, and nobody will ask you that is this one changing? Is this one not changing? It's just me trying to make you understand the basics of some things. If it's an APV question, I've told you the question it will state it there. And even if the question does not state, there are some things that you will see that will make you know that this is an APV question. So you don't need to bother if it's changing or if it's not changing, whatever. It is when you get to business valuation that you might be having a little here and there with if it's changing or it's not changing. But believe me, you don't really need the changing and not changing for anything. The question will pop. I'm just trying to explain basic things to you, please. If that's clear, also on to the next. Another thing I noticed that there was here and there, which is this interest, PV on interest and PV on what's the name, and PV on subsidy. It was one of the things that caused two costs in the class the last time. Now, let me explain again. Let me first start from subsidy. This you can cram it, honestly. You can just cram it. Subsidy is post-tax, it's 1 minus tax rate. But if it's interest, you are charging the tax directly. There are some things that it's just because me, I'm a very, very nice and a very good lecturer. The lecturer that taught me, if it was the situation that you guys were now, he would tell you that Chile or Ola, they used to call me Ola in Port Harcourt at times. Ola, all these things, just if it's to cram it. When you chatter, you go and be finding out why. Why is it done like this? Leave why it's done. Go and chatter first. Once you, what I've taught you, hold it like that. Once you have chatter, you go and be looking for why by yourself. For me, I always like that student understand what I'm trying to do, so that even when you speak to somebody outside, the person can easily ask you that, which center did you attend? Do you understand? You can speak with confidence because you know what you are doing. And let me now explain. Let me start from subsidy. Now, this is the whole story behind subsidy. Government wants to, how would I say it? You know, subsidy, government is just trying to subsidize the amount you are going to collect in bank. Abi, they are trying to help you reduce the amount. Now, they've reduced the amount for you. It does not now make sense for them to now, how would I say it, for them to give you tax savings on it again now. Abi, they cannot save you on tax for it now, since they have, how would I say it, they have given you a subsidized amount. They subsidize it for you, so they cannot say you should not, they cannot say you should not come and take tax savings again. So what they now do, so that's why we not charge, we just do it post-tax. Because, and you know that even that particular one that the bank is, that the government is even giving to you, they are low risk. Yes, now the risk is not that high, like the one of bank. Because bank rate can go up, is high risk loan. But one subsidized loan for government is low risk. So because of it is low risk, the low risk is like a tax shield. So what we are now doing is, so we will now do it, that's how we do it post-tax, just to particularly reflect the reduced risk. That's why we do it 1 minus tax rate. 1 minus tax, if you do 1 minus tax, if you do 1 minus 25%, the tax that you are charging on it is high now. Abi, imagine interest, imagine amount is 5,000. I'm just saying, imagine 5,000. If you charge 25% of 5,000 and 85% of 5,000, how would I say it? Which one is a little higher? That my grammar, okay, that my example no go. But anyways, I don't know. I just hope you guys try to understand what I'm saying. For subsidy, they have given you a subsidized rate. You will have to do it post-tax. You have to do it net of tax. But you see, for that particular interest, for interest now, you know that when a company pays interest on debt, that interest, it reduces taxable profits. Yes, now you would have less, so you would have reduced taxable profits. It means that the company will pay less tax. That is why you just do it. That's why it's called interest tax shield. So that's why you just remove the particular interest rate on it. Straight. Just remove the particular interest rate. Don't do anything. Don't think about it too much. Just remove. Interest is the only one that among the 3 PV of financing effect. Interest is the only one that you charge the tax rate directly on it. If you are trying to charge tax or issue cost, it would be post-tax. It will be 1 minus T. If you are trying to charge it on subsidy, it will be post-tax also. It will be 1 minus T. So issue cost, so interest. So interest is the only one that you charge the tax rate on it directly. Just know it like that. Know it and no peace. Like that. So that is that for that. The last thing I want to, before I solve, the last thing I want to explain or that I want to clear, I saw one very terrible mistake that somebody did. One very terrible mistake that somebody did. And I want to just break it out there. And I want to make sure that we are not making the same mistake. What the person did was, for this what's the name? Capital allowance. They said they gave us a sales proceeds. They gave us the cost. They gave us the cost. They gave us a sales proceed. And they told us to use straight line basis. Abi? Now, the percentage it was this question. The percentage was not, the whole percentage was not given. So the person was correct to use, I think it was 25%. The person did 100 divided by 4 years, 25%. I don't know. I think that was what, I'm not so sure. But like what I'm trying to say, what the person now did to get the straight line amount, the amount to use, gone. The person now did, I think it was 4,000 or 40,000. The person now subtracted, he now did 40,000 minus 6,000 divided by number of years to get the capital allowance amount. Anybody that's done that assignment to know what I'm saying. The person tried to remove the cost, remove the sales proceeds divided by number of years to get the capital allowance amount. How? Please, if you are trying to calculate capital allowance from that beginning, it is not depreciation per se. It's like depreciation, but it's not like. But from that beginning, don't subtract sales proceeds from it before you divide it by the number of years. No, just do the cost alone. Divide the cost by the number of years. Sales proceeds, just use it to determine your balancing allowance or balancing charge. That's the only thing you need it for. Don't go and subtract sales proceeds first before dividing it by the number of years. Don't subtract sales proceeds first to not determine your capital allowance. So you will not subtract sales proceeds first, after you've not done it, you will not still go and subtract it again. No, now. Because that's what the person did. He subtracted it up to determine the capital allowance per year. He now still subtracted it to determine balancing allowance. That's not correct. So don't subtract it up to determine, just divide it by the number of years. Then when you get to the last part, go and what's the name? Go and use it to determine your balancing allowance or your balancing charge. Please, am I fine?
Yes,
Okay,
sir.
sir. Does it mean the one that was solved in the ICANN pack is not correct, because that was what they did? I guess maybe that was what the person got the idea from.
I don't know what they did in the which ICANN pack. ICANN Pathfinder or ICANN pack.
Yes, Pathfinder. They subtracted the scrap value before dividing it by the number of years, because it was on a straight line basis.
The thing is, I cannot particularly answer to Pathfinder. There was somebody I was talking to today that told me something about Pathfinder, and I'm like, the person was not like, are you not saying what they did in Pathfinder is wrong? I cannot see what they did in Pathfinder, but most times Pathfinders are wrong. Sometimes, not most times. Sometimes it's human being that it's not ICANN that did that Pathfinder. If you don't know, it's human being like me and you that solved all these things there now. It's not ICANN. It's human being like me and you that solved those things there. So they are prone to mistakes also. And you know that over time, SFM has developed to a point where people now understand it better. And when most of those Pathfinders were done, I don't know, the understanding was not particularly there. I'm just saying, I'm not saying what they did is wrong or anything. But at some point, there's still a deeper understanding where the person that is solving it knows what he's doing. Then that's why most people, if you don't understand the particular thing you are doing, to go and read Pathfinder is a problem. Because there's a method that the person would have used that you will not understand. So that person could have done it another way. But what I'm telling you is, don't always subtract sales proceeds. Just divide that thing by the number of years states, then go and remove your sales proceeds from the end. Show you. But that's your Pathfinder. I will go and look at it also. Then maybe I'll use it to every day we are learning. So I'll look at it and I'll use it to maybe make good judgment. But over time, that is the way I always, and that's why I always tell my students to do it, and it has been working. But please, I would like if you can send me that Pathfinder, send me the question, send me the solution. I like to learn. SFM is challenging, so that we can. Please, let's solve this question fast. Time has gone. I want to solve this question in 30 minutes. 30 minutes. If you guys don't give me figure on time, so by 10, somebody should remind me. Time. Let me give timekeeper. So 30 plus 9, that's 10. That's 40. So when it's 10:40, let me look for somebody that will remind me in this class. It's just somebody that will do mago. Nina, are you there? If I tell her short now, short will not remind you. She will not remind me. If somebody should remind me when it's Mr. Isaiah. Hey, you, I trust you. I trust you. Mr. Isaiah, please, when it's 10:40, all me. Anywhere I reach, the idea I reach with that. But if you guys call figure for me on time, I'm sure we'll do it. Oh yeah, somebody should read the question for us. Or no, nobody should read the question. I will assume we've all read the question. Or we've not all read the question. Have we not read the question? You are not. You have started.
We have
read it.
Good.
We have.
But it's good that we read questions along.
Yeah. I didn't hear you.
So it's good that we read the question to go on.
It's good that we read the question before solving.
Yes, sir.
You waste my time now. Yeah, let me read it. Let me read it myself.
It's the best so that we can get it. Sorry about it, please.
No problem. Anything for you people.
Thank you, sir. Thank you,
For
sir.
example, we had 5 minutes within time.
Eh?
I will going to add extra 5 minutes for within time.
That's why I want to read it myself so that I can be fast with it. I don't trust people. It's still 30 minutes I'm using. Where's the question? Go back. Okay, here it is. This is a Otagungu Limited is an unlisted company based in Akure, Nigeria. Over the years, the company has been producing and selling agricultural support tools. AL is now considering the production and sale of yam pounders. Although this is a completely new venture for AL, it will be in addition to the company's core business. AL's directors plan to develop the project for a period of 4 years and then sell it for 24 million to a group of young investors. The government is excited about the project and has offered AL a subsidized loan of up to 80% of investment funds needed at the beginning of the project at a rate of 200 basis points below AL's borrowing rate. Currently, AL can borrow at 300 basis points above the government debt yield rate. A feasibility study commissioned by the directors at a cost of 5 million has produced the following information. Number one, the company can buy an existing suitable factory at a cost of 16.5 million payable now. Number 2, 4.5 million naira is required now to buy and install the necessary plant and machinery. Number 3, the company will produce and sell 1,300 units in the first year. Unit sales will grow by 40% in each of the next 2 years before falling to an annual growth of 5% for the final year. Number 4, unit selling price for the first year will be 3,750, but this will increase by 3% per year thereafter. In the first year, total variable cost will be 1,800, but this will increase by 8% per year thereafter. Number 6, in the first year, the fixed overhead cost will be 3.7 million naira, of which 60% are centrally allocated. The fixed overhead will increase by 5% per year after the first year. Number 7, AL will require working capital of 15% of the anticipated sales revenue for the year. At the beginning of each year, the working capital is expected to be released at the end of the 4th year, then the project is sold. Number 8, AL tax rate is 25% per year on taxable profits. Tax is payable in the same year as when profit is earned. Tax allowable depreciation is available on the plant and machinery on a straight line basis. It is anticipated that value attributed to the plant and machinery after 4 years is 600,000 naira of the price at which the project is sold. No tax allowable depreciation is available on the fact sheet. Number 9, AL uses 12% as its discount rate for new projects, but feels the rate may not be appropriate for this new type of investment. It tends to raise the full amount of funds through debt finance and take advantage of the government's offer of a subsidized loan. Issue cost at 4% of the GFR. It can be assumed that the debt capacity available to the company is equivalent to the actual amount of debt finance to be raised for the project. 11, although no other companies produce yam pounders in the country, Yagonku Limited produces yam cassava crushing machines using almost similar technology to that required for yam powder. IO's cost of equity is estimated to be 14% and tax rate is 28%. They have 50 million shares in issues. They trade those shares for 2.53 naira each, and they have 40 million naira bond trading at 94.88 per 100. And the 5-year debt yield is currently estimated at 4.5%, and market risk premium is 4% required. Evaluate on financial grounds whether AL should proceed with the project. Number 2 or B, discuss the appropriateness of the evaluation method used and explain the assumptions made in part A. Number C, provide examples of ethical issues that may affect capital investment decisions and discuss the importance of such issues in strategic financial management. So at Agungun Limited. So let's do our workings first. So let's start workings with our sales, Abi.
We are not seeing your screen, oh, please.
I'm not seeing my screen. Okay.
Well,
This stress me. All this is my table that I used to copy and paste. Where it starts from. Oh, chin. Should be seeing my screen now.
Seeing it now. We are seeing it now, sir.
It was when that thing logged out. I think I forgot to share about. So we are saying, so sales, Abi. So we are saying, so let me say, year 1, Abi. Let me do it in tabular or in this table form. Let me see. How many years?
4 years.
4 years. So let me see. I have year 1, year 2, year 3, year 4. So I have so let me say sales, Abi. So let me say selling price. Let me just say sales. So what's the sales for year 1? People have started. What's the sales for year 1 now?
1,300 units.
Sales is no bigger. Sales, no unit. Sales. Like selling price.
That's 1,300.
For selling price.
Is it sales
3,750.
or selling price, sir?
3,750.
Selling price is 3,750.
What's the grammar on selling price? What did they say happened to selling price?
Unit selling
It will
price.
increase by 3% per year after the first year.
Yes.
Okay, so increased by 3%. Everything. So
After the first year.
we have that means we have 3,750 across the board.
This year.
750.
3,863
So you now come here.
approximately.
So you now say growth rate. Growth rate is at what percent?
3%.
3%.
I just hope somebody's already having my figures for me.
Yes, sir.
So when I say 1 point, oh, shit. I don't think I'll use this what's the name again? This tabular method, pin. So if I say 1.03 is power 1, 1.03 raised power 2, 1.03 raised power 3, 1.03 raised power 4. Oh yeah. We are
3,863.
3,978.
Sorry. Can you read that sales line? Let me read it by myself. Can you read that sales line for me?
Yes, sir. Because
the first
the first
increase is
one it
after
should
the
be
first year.
raised to
The
power
first
0.
price should be
Zero,
3,000.
yeah. The first one was
For me again.
It's the second year that we start
Okay. Can you
increasing.
read sales line for me again?
Unit selling price for the first year will be 3,750, but this will increase by 3% per year thereafter.
So it means this is year 0. This is year. This is year 2. This is year 3. So then I have 3,750 here. Yeah, year 2.
3,862.
863.
Year 3.
3,978.
3,978.
Year 4.
4,098.
4,221.
4,098.
4,098, please.
So I have units. Is there anything? What happened to my units? What's the value of my units?
1,300 units in the first year.
1,003.
Like, is there anything? Is there any like story? I think I saw something like the increase or decrease.
Unit sales will
Yes,
grow
sir.
by 40% in each of the next 2 years before falling to an annual growth rate of 5% for the final year.
Okay, so let me do units here then. So you see year 1. Year 1 was 1.3, have you?
Yes.
So you say 1.3 times, and then sorry, let me read that line myself again. So 1.3 in the first year, then okay, 1.3 in the first year. So you can say, then you say year 2 is equals to 1.3, 40%, have you?
Yes.
Yes, sir.
Oh, yeah. So you say 1.40. What's my answer?
1,820.
1,820.
1,000 each. So they now say that what was the name now? They said it will increase by 40%
Continue.
thereafter.
40.
So you come here. So you say yeah 3. You say 1,820 times 1.40. What do I have?
2,548.
2,000.
548.
2,548. Please hold on. I want to try something. Okay. So the way this is here, some people you can do it like this. I'm sure some people are already confused
Press
like
the
that.
button.
Let me say, oh, you can do it like this. So you'll get the same answer. You should get the same answer. You should get the same answer. If you do it like this answer times 1.40. You cannot go this 1.4. You cannot go this 1.40 again because you are just going that particular one at that next year. This one is already there, so you're just going into at that next year. But if you do, you can do it like this, or you do it like this also. Any which way works. Yeah, yeah, cool. Yeah.
It will fall. It will fall to 5%.
So you're done saying 2,548 multiplied by 1.05. What do I have?
2,675.
2,675. Yeah, my unit. So yeah, I said I have 1,820. Sorry, I have 1,820.
820.
2,548. 2,675. Oh yeah. So my tools.
First year 4,875.
4,875.
Second year 7,031.
7,031.
Third year 10,136.
10,136.
And final year 10,962. Please, there is supposed to be thousand behind those figures, except you are rating it in thousands, sir. That's our sales.
I'm losing it up in 000 now. I'm raising that thing up in 1,000. Oh yeah. Variable cost. Do you have anything with variable cost? Yeah.
Total variable cost is 1.8. But this will increase by 8% per year thereafter. In the first year, total variable cost is 1.8, but this will increase by 8% per year thereafter.
Said 8%, have you?
Yes, sir.
Yeah. People are not active with these figures now. Oh yeah.
2,340 for year one.
No, the first one is 1.8, Abby.
Yes, sir.
Yes.
And this one is 3,000.
No, 1,944 for the cost. 2,100 and 2,267.
Yeah.
2,340 for year one.
Mm-hmm.
No, for year one, sir. It's for year one.
Just continue.
Okay, 3,538.
3,000.
538. 538. 5,351. Then 6,064.
So fixed cost, have you?
Yes, sir.
What's my fixed cost?
Unallocated fixed cost 1.5.
No.
Unallocated fixed cost 1.5.
Okay, they said
That's 1,500. Yes.
Okay, so they said 60% was allocated centrally. What it means is when they say something is allocated centrally, what it simply means is it's not, how would I say, it's not particular for that project, it's general for everything. So if 60% is general, so it's 40% that is for this particular project. So 40% is the unallocated. So that's what we are going to use. So you're supposed to do 40% of the final answer. So what do I have?
1,500.
Across the board.
Yes.
What's the good rate?
The growth rate is
5.
Is
5%.
5%.
This 40% of what?
Of 3,750.
3,750.
750. Yeah.
15.
Yeah, true.
1575. 1654. 1736.
That's multiplied by the unit, have you?
No.
No, sir.
Just put the figure like that.
No.
Yeah. What's next?
Working capital. Working capital, sir.
People say that Igbo have no book. The first day we were doing this MPV, Igbo were looking like what I don't know. So now Igbo already out. Oh yeah.
15% of sales revenue. So let's go to sales revenue, sir.
Yeah, sure. So what's my sales revenue?
For year one is sales for year one is 4,875.
Sorry, hold on. Let me change. Let me copy this.
No problem.
So you say so let's say sales revenue. So you say our sales revenue for year one is what?
4,875.
4,875 or CTSF 7,031, have
Yes.
10,126 10,6. So what else?
15% on the sales revenue, sir.
So our working capital at 15%. Yeah.
731.
731.
1055.
1055.
1520.
1520.
1644.
1644. Oh, these are working capital now. So let's do
Movement.
let's do movement. I don't do. So movement. What's my movement?
Practice.
I practice, I mean.
731.
731.
324.
324.
Yes, sir. 465.
465.
124.
124. So what's next?
Yeah. 1644.
Relevant years. Abi?
Yes.
Relevant years. If you are still here and you don't understand what we are doing to this point, no. So these are year 0, Abi? This is year 1, year 2, year 3. Is this complete? Okay, we still have
1644
one more.
should be the last
It's
year.
supposed to be here. Supposed to have year 5 here, Abi? So 1644.
Yes, sir.
1644. Okay, let me put this one in the jacket. So this will now be our what? Our year 4.
Year 4.
What's next?
Tax savings of capital allowance.
The tax savings capital allowance. Do 4. Let me do 4. This. So if I say year, you see description, you see tax. What's our tax rate? Sorry,
25%.
25%.
Tax saved at 25%. So you say capital allowance equals to what's our cost, Abeg?
4.5. 4,500.
We're now saying 4,500. What's our number of years?
4 years.
What's my answer?
1125.
1125. So you come here, you see year 0, you see cost. You now see 4,500. Okay. So this one now is our Clement beginning now. What do we used to call this thing, sir?
Depreciation capital allowance.
Machine cost.
Machine cost. Wow. 1125. You see tax setting down. What's my tax setting down value? What's my tax sitting down value?
3375.
Hmm?
3375. 3375.
So I come here and say,
But sir, you did not
I don't know what.
write down the answer or tax saved at that amount. Tax saved is 281.25, please.
I don't understand your grammar. I don't understand what you're trying to say, madam. This is my tax sitting down value.
2250.
2250.
250.
This is my tax sitting down value.
1125.
1125.
Yes.
So if I come here and say sales proceeds, I mean, what's the sales proceeds? 600. What's my taxes and what's my balance? Is it balance allowance or balancing charge?
525 balancing allowance.
Five to five. Yeah. 25%.
On the balancing allowance,
281.
Balancing allowance what?
131.
What do you call year one?
282.
281.
Wait.
281.
Yeah. I thought it was a question. 281, sir.
And for you. It's 1040, sir.
Okay. Thank you. I'm saying something that nobody's saying, but let's continue. Basically, don't tell me something. Yeah.
Yes, so yes, you said it earlier. Is this issue of capital allowance? The method you apply there is the exact way we used to treat it in taxation, but the pathfinders that have been coming through, I've not seen where they did it like this. What they do is they will write down the cost minus the scrap value, and we divide the redistribution. That's what they have seen in pathfinders all over. So I don't see so. That's why I'm a little bit confused. Though I understood what you did here because we done this in a taxation. So I don't know which one to stick to. In Pathfinder, we see that one applying depreciation directly in a reducing balance method.
I heard you. I've seen something, Seth. Yeah. 0, year 1, year 2, year 3, year 4. Mr. Deba, are you here?
Yes, sir.
Oh, okay. You know, when you sent your assignment to me and you asked me about capital allowance, first thing I told you, was it you? No, I don't think it was you. It was not you. There was one person that sent the assignment to me that told Mr. Michael. I think it was Mr. Michael. That I told that asked me about capital allowance, and this was exactly what the person did. And I told the person that I don't think it was correct, right from looking at it. Now, right from looking at this particular one, also, I don't think what we did is correct. Why? People know me of man of many tricks. That's what somebody has called me before. Why I'm looking at it for me is okay, let's do something. Do something for me, class, please, real quick. Subtract the sales proceeds from this thing. What do we have?
3.900.
I'm lost. Like divided by 4 now. Divided by
975.
Now charge
975.
Now charge 975. 975. 975. Okay, charge 975. 25% of 975 for year one.
243,000. Okay. 244.
So that means I have 244. 244. 244. So now, but this is where problem will happen. So do something for me. Do 45 minus 975. What do I have? Yeah, 45 minus 975. What do I have?
3525.
Subtract 975 from it again.
2550.
Now subtract 975. No, okay. Come on. 2550. Okay, subtract 975 from it again.
1575.
1575. Now subtract 600.
975.
975. So our balancing allowance here is 975, are we? 25%. Start 25% on 975. If it gives me 244, that means we have 2
Yeah, 243.
244 approximately.
That means you have cooked. It means we have cooked beans. So it means I was wrong. So it means I was wrong. That's why I said it's good. So what did you guys? I will explain what was happening to you. Give me this figure. Usually I saw this thing when I saw 281, 281. And when it got to this last, I'm saying 131. I was already suspecting something.
Mm.
3525.
3525.
2550.
1575.
And then 975 balance.
What did that person now did that was so wrong. Maybe it was that person's capital allowance that was wrong, because the person was not even getting the same thing. That person that sent the assignment to me that did it exactly like this. He was not sending
That's
this.
the same question. The same thing I have, sir. I'm the
This part,
culprit.
this part was wrong. I was looking at it that what was. So please, let me correct myself from the initial stuff I said. So when you do what's the name now? But like I feel like these are the as I am doing these things, I are seeing some of the things I'm making, some of the corrections I'm making. Let me tell you something. Let me explain something. Some of you can have different perspective. Oh. Some of this man don't know this man don't know anything. Please, Mike, please. See, this man don't know anything. He just come use format for us for you. He does not really know what he's doing. Do you know that this question I could have
Now,
solved
we
it?
go, we go, we go, we go
So
through
now let's
anybody will talk that thing.
but I'm just saying, some people have it in mind. Now, let me tell you something. You know that I could actually have solved this question, put it inside paper. You are not seeing me now. I would just be reading the paper and be solving it for you here. You will not know if I know it, or I don't know it. Do you understand? But the problem is, or what I'm telling you is, most of these questions, I don't look at it before. Like, it's not, but like, I don't even, where's the time now? Maybe I just come out, so I can't start the solve question. Where's the time? So, what I'm saying is, you see, all these mistakes I make in class is good sometimes. Because once you are doing the same thing in exam, it allows you to say, okay, there was, this man made the same mistake and he corrected it. So, it will not allow you make that. And it makes you remember faster. So, it will not allow you make the exact same mistake that I made. This answer I noticed on time because when you use straight line, you see all these things are the same thing now. All these places we charge 25, we charge 25% on 975, on 975, on 975, and on 975. So they're supposed to give me the same thing. So that one immediately I had one funny figure here. I don't know if anybody noticed, but my reaction changed. I told you guys I've seen something. So I just knew it at the back of my mind that we have cooked beans somewhere. So all
Yes.
these slight things are things that just makes you that keeps you on check and on guide in your work. I told you before that things that you know the ones that correct, know the trick basically. Just know the trick basically. So please, when you are doing straight line basis, please subtract your sales proceeds from beginning before dividing it by the number of years, please. But I would still, I'm going to send me that particular question. I will still look at one or two, three more questions and confirm that's the way it is done. Then we can always go ahead like that. Please, are we fine?
Yes, sir.
Yeah.
Well done, sir.
You're welcome. Yeah, let's continue. If somebody wants to tell me something, oh, yeah, please as the person wants to tell me, let me let's continue. Let's continue. Oh, yeah. Okay. So yeah, you say yeah. What's the figure for my sales? My sales, my sales, my
4875 for
sales.
year one,
4875.
7031 for year one, sir.
So yeah, I'll move it. I'll move it.
Okay. 7031.
Mm.
10136.
What?
10136.
10,136.
And then 10962.
Variable cost.
Variable 2340.
2340.
3538.
3538.
5351.
5351.
6064.
6064.
Fixed
Yeah.
cost.
Fixed cost.
Fixed cost. 1500. 1575.
1575.
1654.
1654.
1736.
17 what?
36. Please, the variable cost and the fixed cost are in jackets.
Okay. That's just it. That's my profit.
Yes.
For year one, 1035.
1035.
1918.
1918.
3131.
3131.
3162.
316.
3160.
Tax.
At 28%.
This 28 or 25?
25%.
Yeah.
Oh, Nadia, I fail. Oh.
It's 25.
What do you call it?
28. I didn't know it's 25.
25%. So 259.
259.
259. Year one. Year two, 480.
480.
480.
Yes, 480. Year three, 783. Then year four, 791.
Joy.
Yeah. 244.
244.
244, 243.
Working capital.
From year zero,
How much?
7,331. 731. Year zero, 731. Followed by 324. Then 465. 465. Yes. 124. Then 1644.
Yes, 124.
16. Abi?
Yes.
Yes.
No, he's in.
Yes,
He's
sir.
in. He's in. He's without jacket, please.
Thank you,
Initial
madam.
cost.
Initial outlay.
21 million. 21,000.
Sales proceeds.
240. 24,000.
What's my net cash flow?
For year one.
Somebody should be doing year 5, year 4, please. I beg.
For year one is
124.
696.
696.
Year zero, 21,731. Jacket.
So
For year two is 1217.
1217. Mm-hmm.
For year three is 2513.
No, 2468. It will be 2468.
For year 3.
Yes.
Last year, go.
78783.
28258.
Oh, Jesus. 28.
258. That's 28,258.
A discount factor. What did you guys get? What did you get? Oh,
10%. But I made a mistake. Sir.
why did you not tell us to use
I
the
made a
10%?
mistake. Sorry, I made a mistake because I used tax of 28%, please. So I don't know. The answer will not be correct.
Please, what did you get? People that did the discount factor, what did you get?
It's 10% now. The 28 is for tax.
Oh, yeah.
10%.
0.909.
0.8,
0.826.
0.7.
0.751.
0.751.
0.683.
683.
What's the next discount factor after 683? Six two one. After 621. After 621, you have 564. After 564, you have what's the next one here? I think 514, 513 then. Oh yeah. Two 1731, I mean.
Yes.
What's this one?
So for year one, 634. 634. The next one, 1055. The next one, 1853. Then the last one, 19300, 19,300.
What's my net present value?
I think for year two is 1005, not 1055. Please, we should confirm for year two.
So please, the year one is 633, not 634.
Year one is 633.
Year two is year two is correct.
1005. Good.
100.
So that's not the MP.
Yeah, what's my MPV?
1050.
That's my MPV. When you ready, let me know.
1054.
This was my MPV now.
Hmm. 1061.
I've had like I've had like 3 million answers like this. People still don't know the answer. This what should I write there now?
1060.
1060. 1060. Yes.
For our PV of issue cost, please hold on with your question, please. So, like I told you guys, the first thing to always do, first determine the so let's first do our What's the total? What's the gross finance? What's the gross finance? What's the gross finance raised?
4%.
Gross finance raised.
Let's see if I get
4%.
this. No. The
Finance
total.
is
Scroll up. Let's see.
Okay, gross finance is 21 million.
No.
it is usually your initial outlay plus working capital. So that's 21,000 plus what? Plus 731 equals to 21,731. Are we? So you now see gross finance required is equals to Abi.
Yes.
Yes.
Is equals to what? 21, 31, 1 minus, what's our issue cost rate?
4%.
2.04. That gives me what? That gives me what now? People have started with
22,636.
22,636. You know, the issue cost up to year 0 now. You know, say 22,636 multiplied by 0.0. It's the same thing what I did in class that last time. The only difference is in class I put the zero, I did all these things together from here. Do you understand? I did this 0.04. You know what I gave that it was gross amount over 1 minus issue cost rate multiplied by issue cost rate to get my issue cost like that. But what I first did, I first converted to gross finance required before now bringing the 0.04 here to determine my issue cost. It's the same thing I'm doing. Yeah, that's what I figure.
905.
905. So you will now come here and say PV of issue cost. So you now say 905 multiplied by 1.00. 905, Abi. Yeah. Which one is the next?
PV of interest saved.
So you say PV. Recalculating the calculation of PV of interest. Yeah, what's the first thing you are doing?
Total borrowing.
What's our step one? Accumulate all interest, Abi. So our interest on loan. What's our interest on loan? What's the interest on loan?
6.5. The cost of debt plus the basis points. 6.5.
6.5. No.
It's
No.
7.5.
No. What I'm even saying is, don't let us. And you can do it two ways. But I'll do it this route. So do it like this. What's the percentage of the loan?
4.5.
Subsidized loan is 80%.
20%
20%.
subsidized.
Abi. So now say accumulate or do it like this. So that I don't scatter the work. So what would this give me? This 20% is the amount that government. I think government is subsidizing 80% now.
Yes.
Yes, sir.
So what's this one's figure?
4527.
4527. Yeah.
18109.
Normally, if it was me in exam, I would have done all these things together on this same line. I would have done 22,636 multiplied by 20% multiplied by the interest rate. So I'll get one answer instead of me not get time for all these ones. So you now say, you come here again. So you're saying 4527. What's our loan rate?
7.5.
7.5%. What do I have?
33340.
What's our subsidized loan rate?
Is it 4.5?
5.5.
5.5.
5.
So what do I have?
996.
Can I say tax saved on interest? So you see, so let me add them together for me. What do I have? What do I have? Oh,
656. Are we adding up?
3.
yes, now.
Yes. 1 3.
Cannot be okay.
1336.
1336.
136. So tax saved on interest. So you're saying, so you now see as
Multiplied
one.
by 25%.
Thank you. Multiplied by 25%. What do I have?
334.
So you now say PV of interest. So you now say 334 multiplied by which discount factor are we using?
Normal loan. 7.5.
At 7.5%.
3.349.
we are saying 334 multiplied by what do you call it? 3.349. Please always discount to your normal borrowing rate, please. So that's what
1119 319.
This is my answer. So this is my PV of interest. We have last one. PV of subsidy. PV of subsidy. Oh yeah, what's the first thing I would do?
Determine the savings of subsidy.
So we determine our SOS.
2%.
This
That's 2%.
7.5 minus
5. SOS rate. So that is 7.5% minus 5.5%. 2.5%, have you?
2%.
2%.
Sorry. So the next one, you say determine amount subsidized. We've gotten it up there. I could have just used it, but I'm just trying to break it down. You say 80% times 22.
636.
So that is what? That's 18,109. Okay. So you now see the next one now. Calculate net subsidy. So you now say 18,109. 18,109 times what now?
That is 2%.
Times 2%. Times 1 minus 0.25. What do I have?
272.
272. Next, calculate. This thing is simple. Calculate PV. So as you are doing it step by step, and it's just flowing. PV of subsidy. So you are saying 272 multiplied by 3.349, have you?
Yes. 910.
What do you say it is?
910.
911. Now, wow.
So if you come here, you now say PV
of financing.
Of financing effects. So you see PV of issue cost. What did that give me? I think it was 9. Can I come?
905.
905.
905.
045.
5.
What did this give me?
1119.
Mm, 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 what did this give me?
911.
So what's the total? So issue cost is negative.
1125.
Issue cost is negative. Did you remove it?
Yes. 1125.
So you said I have 1125. So what do I have now?
2185.
2185.
So you now see your adjusted present value 2185. Easy peasy. As simple as ABC.
Sir, it isn't easy.
Easy peasy.
It isn't
It's very
easy.
it's very easy. It's easy like 1, 2, 3. Please, do you have any question, please? Please ask me. Yes, Victoria. Victoria, ask me a question.
The gross finance formula you gave us last week. You said the formula is gross amount over 1 plus issue cost times issue
1
cost.
plus. Was it plus we use? Or be minus?
Minus.
1 minus, sorry.
Hmm.
1 minus gross amount over 1 minus cost times issue cost. But you didn't do that here. You just did gross amount over 1 minus issue cost.
That's what I was explaining now. See what
That
I did. Initial. See what I was saying. This is it. This is the net amount over 1 minus issue cost times this is the issue cost. I could have done it on the same line. I just had to split it to get my gross finance required first, for multiplying by the issue cost rate. This is still the issue cost rate. I could have done it together. If I do it together, I'll get my issue cost once and for all. But I just wanted to split it here so that you guys understand the basics. It's still the same thing. So yeah.
okay. And then the what's it called? The under PV of interest. Why did you use 22,631 instead of 21,731?
I already told you now, at this point, don't use the gross finance list again. It's the gross finance required you'll be using. Don't tear that book.
Can you come again?
After you've done the gross finance required, don't use this amount again. The gross finance required you continue using. That's what we used here too.
Okay, thank you.
Yeah, welcome. Yeah.
Sir. Hello, sir.
Yes, ma'am.
You said we should not use the 21731, but we should use the gross finance required. But I wanted to ask something. Is it in this particular question or in all the questions that will come across?
All the ones you come across.
Okay, we should do it like this now.
Yes, ma'am.
Okay, sir.
You guys want to ask me one question? How is still up? Okay, listen.
So that last week on is not. We should go and do it like. The what's it called? The workings we did last week. It was not like this.
What did you do? What did you do last week? Wasn't it the one we used?
No, that was not what we used.
This one that I don't have my material. Now how do I confirm?
Last week, you didn't add the issue cost to the finance required.
I don't understand your grammar. I didn't add everything.
The issue cost, that 4%, that 4% something. You didn't add it to the finance required detail, the finance amount. That was what I was asking last week, but you were like, no, you will not add it to it.
I tell you, I don't understand what you're saying. What issue cost amount?
Can you go to your workings?
I'm there already.
Okay. So last week, this gross finance required that you calculated to be the new figure now. Last week, you didn't add this is 905. That's the issue cost to the 21,731. I'm just using these figures as example. I don't know if you get what I'm trying to say.
I didn't add it. I'm not adding it now.
No, you still included it now. Should be this 21,000 was for gross finance raised. And then after you must have added the issue cost, it now turned to 22,636. So, but last week you only used this 21,731. You used it as your you took subsidized percentage and the interest.
What you're saying is it was just this figure that will now continue.
Yes, that was the figure. That's
Yeah.
21,731. That was what you used. But I raised it that day. You were like, no, you're not going to add it.
So if you added it, you should have had like maybe like I think that figure was like 42. I'll be waiting.
I cannot remember that figure.
42,097.
Okay, so if you added it to that, I had like maybe like 43 or 40 something. Okay, I get what you guys are trying to say now. Okay, let's still do like this. Give me most likely. Please, somebody's unmuted. I might be the one that will come on Wednesday. Might be the one. I'm not so sure. So if I'm the one I'm coming on Wednesday, I would have looked for that solution. Then I would try to look for what happened. And I'll come up with a solution, like a proper one. If it's that solution but I cannot say for now as I'm not seeing the solution. So if it's that solution that is wrong or is this one that is wrong, I would look at it. It's fine. God, let me find that solution. Right? But I think somebody already sent it to me. So after the class, I'll just look at it. Not after the class, maybe tomorrow. Can you want to tell me something?
All right. Good evening, sir. Well done and God bless you, sir. My issue is on how do we get the interest on normal loan and the subsidized loan? The 7.5, I can't get it. Maybe you can help me to.
Not in the question. I think it's in the question. Not confirming it. They just give it.
Is the how to compute using the government debit yield rate? I don't get it.
Okay, this one they said the normal borrowing rate is 300 basis points above the 5 government yield. What's 300 basis points? Please convert 300 basis points to percentage.
It's 3%.
And if you look at this down part, I think I read it somewhere. The 5-year government debt is currently at 4.5%. I add 3 to 4.5 now.
Okay, thank you, sir.
You're welcome. These questions are too much. Miss Divine, what can I do for you?
Sorry, sir, it's not a question. It's concerning that lady that said we didn't add the working capital to the initial outlay. I remember I wrote it in my notes and I'm looking at it now. We added
No, it's not
it
working
together.
capital she's talking about, it's issue cost.
Okay.
Like that particular issue cost, I think we got something like 0.88 Kinecon. So it was that one that she was saying that we did not add to that issue cost, not working capital.
Okay.
I'll look at it. No, see, you guys not allow me to do my international investment appraisal. I don't even do introduction. I don't do anything. I just use this old class to come and solve people's work for you. It's good. Clap for yourself. Anyway, I'm not done. Anyway, I will do my own introduction because I'm coming next week to solve questions.
International.
Before we go, Let me look at it if it's something I can finish. Yeah, you should give me 15 minutes. 15 minutes. Let me just go through this. Give me 15 minutes. Now, international investment appraisal. Listen up. This is another topic. And this is our last topic with capital budgeting. International appraisal is very simple. You just need to calm down. I said it's very simple. You just need to calm down. How would I finish it if I start explaining? Hey, Buzed is not hot. But let me just tell you. Okay, let me just don't worry. I will just brush through it. If I have time on Wednesday, I would do introduction on Wednesday. Then we'll solve question on Wednesday also, and we'll finish it on that Wednesday also. But like, let me just brush you through it. So what we are just trying to do, we're just trying to basically do, let's say we have a country, we have a company or an investment in Nigeria, or we are based in Nigeria, then we're going to maybe outside country, maybe Canada or Cuba, to go and maybe a subsidiary, maybe a branch or something. So we're trying to just open another particular branch or another particular company outside our own country, basically. But the thing is, you cannot just go there and just. So there are some things that are involved. There are some things that you need to consider. Number one, you need to consider exchange rate. Number two, you need to consider taxation. Number three, you need to consider transfer pricing. Now, when I mean exchange rate, now as of today, I think dollar is about 1.5 or 1.6, Abi. So we are saying 1,600 naira is equals to $1. What it means is you need to give 1,600 naira to collect $1. Now, based on that analogy, we have something we call base currency and what we call counter currency. Listen up. We have what we call base currency and what we call counter currency. Now, with the explanation I gave, I said 1,600 naira will give you $1. In that particular situation, 1,600 is the counter currency, while $1 is the base currency. 1,600 is the counter currency, while one is the base currency. How did I determine it? Anyone that has one at the back is usually the base currency. Anyone that has one. If it's 1,500 Kinecon equals to one, that one that has one is the base currency. The other one is the counter currency. Now let me go to the conversion of them. If you're trying to convert to, please don't forget this terminology. If you're trying to convert to counter currency, please, you multiply. If you are converting to counter currency, you multiply. But if you are converting to base currency, you divide. If you are converting to counter currency, you multiply. If you are converting to base currency, you what? You divide. Now that also leads me to how to determine or how to predict exchange rate. How can predict exchange rate? So what predict exchange rate means is in some questions or in most questions, they might not give you exchange rate they can just give you exchange rate as at today, which is what we call spot rate. We call it spot rate. They can just give you exchange rate as at today, which is what we call spot rate. So they might not give you exchange rate for the next year, for the next 2 years. Now, how do we now predict it? How do we determine it? There are two ways we can get it. We can either use purchasing power parity, PPP, or we use IRP. IRP is your interest rate parity. PPP is your purchasing power parity. This is the formula right here on my screen. This is the formula for purchasing power parity. This is the formula for interest rate parity. This is ST. ST means estimated spot rate. This is the spot rate you want to determine equals to SO. SO means what now? SO means spot rate. Like this is rate as they are giving you that in the question. Multiply by 1 plus inflation. This is inflation. If it's inflation, they will give you general inflation, maybe inflation of the domestic country and inflation of the base of the foreign country, or you can call it inflation of the counter currency or counter country plus inflation of the base country, anyone that's comfortable for you. So this is how to use purchasing power parity. This is how to use interest. It's still the same formula, but in some questions, they might just give you inflation. In some, they might give you interest. Anyone that's given to you is still the same way you will use them. So that is how you use your. But if they don't give it to you like this, another way they can. Please, are you guys listening to me?
Yes, sir.
Yes, sir.
Yeah.
Okay. So
Yes, sir.
another way they can give it to you is they might not give you in all this way. They can just say Kinecon. Say maybe the naira is trending against the dollar is trending against the naira. the dollar is strengthening against the naira, what it simply means is let's assume we have 1,600 naira now makes $1. They now say the dollar is strengthening again. As it's strengthening again, it means that what? It means the dollar is gaining more strength. And if it's gaining more strength, it means that the value of naira is going up. It means the value of naira is going up. What it means is if it is 1.5, as it is 1.5 now, the Nazi dollar is gaining more strength. It means that it is going up. Either it is at 1.6 or it is at 1.7. It means that you now need to give more of that money to collect $1. So they can say like that, or they can say the dollar is weakening against the naira. If the dollar is weakening against the naira, it means that naira is what is coming down. So they can give you another way they can give you is they can say okay, they can say it's strengthening, maybe it's strengthening by 5%. They can say it's strengthening by 5%. It's still the same thing. You will just go it by 5%. So now as we are like, I think dollar is 1.6 now. So if they say dollar is strengthening by 5%, so you just do 1.6 multiplied by what? 1.05. Just go it, just the way we've been going, nothing different. So that's all about exchange rates. Basically, another thing is taxation. Taxation is still our normal compulsory levy, normal taxation. But the problem with taxation is usually that now let's assume I have, as I am now, I have a business in Nigeria, and I want to maybe open a branch in say UK. You know that let's say Nigeria and UK, we have something we call double taxation agreement, DTA, that will not charge tax on a particular business twice. Now the problem now is, so now once I now make money in the UK, and it would have been subjected to tax in UK. So it would not, I'm not showing anything on my screen. It would have been subjected to tax in UK, so you cannot come here and also be subjected to tax. Sorry, it would not work. But the only situation where something like that can work, we have 3 scenarios, and I think I gave those scenarios in the material. Let me see if I have them. Am I opening different materials from this? Okay, we have 3 different scenarios. These are the 3 scenarios. See what we can have. So now let's say this company is Nigeria. Okay, so if it's 30%, that means the tax rate in Nigeria is 30%. The tax rate in UK is 20%. You will not need to pay any tax. Do you understand? You will not need to pay any tax whatsoever. Now, if the company if the tax rate in the foreign country is now more than the tax rate here, you will need to pay additional. Why? Because let's assume that you would have been subjected to tax. What we are assuming here is that this country, this company is a Nigerian company, is just operating there. So what this is assuming for you is that okay, a 30% tax would have been paid, but there is an extra 10% tax that you will need to pay to them. This scenario 2 is usually the one that I can ask the most, the one that usually requires extra taxation. The one that usually requires extra taxation. But for this scenario also, for this third scenario, no further tax will be paid. But for scenario 2, you pay extra 10% tax. Usually that's the trick code. That's usually the trick code taxation majorly. It's just that extra tax that will be paid. And the extra tax that will be paid sometimes it might require conversion. That is, it's not the currency that's so you might need to convert it to that country's currency. That's all about taxation. I'm just breaking you through, but like when I'm doing it proper, I'll put figures. Lastly is transfer pricing. Transfer pricing is, that let's say the 2 companies, they are interrelated now. So you know that let's say the company in UK now, maybe they produce maybe they manufacture cars. Then the one in Nigeria, maybe we do body parts. Maybe we just build body parts. You know that there are situations, or most situations, I will be the one selling to them, to the company in UK. You know that to the company in UK, it is a raw material because they're using it to make fully made cars. But to us, it is sales, and it's within the same. It's within the same. What's the name? It's within the same company. So what transfer pricing now? Transfer pricing doesn't necessarily have to do with sales and items. It can be as a result of maybe management salary. It can be as a result of royalties, where you pay royalties to people within the organization. Nothing different. The only thing that is different is if it's royalties or whatever it is, you might need to just convert. Let's say they pay royalties from UK. So once you get here, you might need to convert it to this our country's currency. So once you've done all those things, boom, you are done. Nothing left. So I think there's a format here for international capital budget. And I hope I see the format. Okay, so this is the format. So we still the same thing we've been doing. Your normal sales, your variable cost, your incremental cost. If there's intercompany charges, that if there's royalties, please you subtract it. Then you get your profit, you get your tax. If there's balancing charge or balancing allowance, that's your tax savings, your scrap value, your initial outlay, your working capital. So once you are now done, so once you've gotten your remittable cash flow, you will now convert it to the home currencies, to the home currency. So you convert it using the exchange rate that was given to you. Once you've converted it, you will now get the cash flow that is supposed to be remitted to the parent company. So if there's additional tax, you would have converted this also. You would have converted this thing using the exchange rate so that you can have this particular currency. So you subtract it. If there's royalties, this same royalties is the same thing that's happening here. But you might just need conversion here. So once you are done, you get the net cash flow, you discount it with the discount factor, you get your present value, you get your net present value. And that is all. Simple, very, very simple, Seth. So how many questions do I have here? So I have 3. Okay, this is the question somebody was asking me that I solved in class. I don't even know, Chef. So I have about 4 questions. So I'll solve 2 in class next week or on Wednesday. And you will go and solve the remaining 2. And that would mark at the end of our capital investment decision. Please, do you have any question? Sumiki, don't please talk to me.
For that double taxation agreement, can you re-explain the scenario too, please?
No, when I do full introduction, when I put figures to it, you understand better.
Okay, sir. Thank you, sir.
You're welcome. Talk to me, Miss Lesam.
Sorry, it was a mistake. Sorry.
Okay. Ms. Basia, you want to ask me something? Okay. So I would just assume that there's no question. Please practice questions, solve questions, and if you guys have noticed, anytime we solve a new question, there's always there's always an hidden clause that you've never thought about before. This particular question we just solved. That sales part was giving people headache, where they said that it fell to 5%. There was a whole lot of drama there based on the assignment I saw. Do you understand? So what I'm trying to let you know is all those kind of questions. If you see this question first time and it's in the exam, there's 80% chance you will fail it. Or that first question we solved. If you are seeing it in the exam first time, there's 80 or 90% chance you will fail it. When the way we solved something like this, you said that if it was only number 1 that we solved, and you could attempt that second one comfortably, that's the exact same way it will be in exam. Exact same way. If you solved questions that look like this before, you'll be able to attempt. It's not solve. Nobody you set question. It's nobody that said they say attempt. So just try to have a reasonable explanation. That's what it means. Solve questions, read your books, and please don't forget the theory part. I've been shouting. Some of you just feel like it's calculation. Theory can give you comfortable 30 marks. I'm not even joking. Theory can give you comfortable 30 or 20 marks. And if you have 30 or 20 out of 50, so if you solve 1 or 2 calculations, you can cross. Please don't leave the theory part. I'm shouting. Don't leave the theory part. Thank you very much for listening to me. Have a wonderful night, Chest, and I would see you maybe Wednesday or next week. Good night.
Good night, sir.
Good night, sir. Thank you, sir.
Thank you so
you.
much. God
Good
bless you.
night.
You're welcome.
Bye, sir.